What's played out now in the fixed income markets? Joining us for this, we have Mr. Chuka Nwachukwu, is the group head, balance sheet management at United Bank for that's UBA. Great to have you on the show. Good morning.
Morning, Lottie.
Yeah, it's good to see you. So I'm sure you're also holding on for the inflation numbers. That's for the rebase number we're waiting for for January. I'm sure in your circle, all of you are just standing by, waiting for those numbers. What are you expecting?
Well, like you mentioned, the numbers are actually out. I think it's around 24% from 34.80. And that's well over 100 basis point drop from where it was before this morning. And so we expect that the market will react, especially the fixed income market. We expect that yield will drop significantly, especially with the auction tomorrow, which is the treasury bills auction. So we expect to see a huge reaction on the fixed income markets as regards this drop in the inflation figures.
All right, I guess I'm still waiting to hear from the MBS. I've not gotten that info yet, but I'm still waiting, for that. But we saw some contraction in normal yields for the NTB market, about 6 basis points and 4 basis points. What do you think contributed to that?
I didn't get that, please. Can you repeat that question?
Yeah, so looking at the OMO yields, what's been playing out with the OMO yields, with the trading we've seen so far this week?
Okay, so let me start with the liquidity first. Of course, liquidity drives the activities on the fixed income market. Liquidity has been pretty tight. We have, between yesterday and today, the market is in a debit of about 800 billion. But there will be a bit of respite this week, especially on Thursday, when we see about 1.4 trillion coming in the place of a maturity from the NTB auction that will be tomorrow, and then as well as coupon payments that will come in about 300 billion. The yield on the fixed income market has gradually declined. We've seen decline, especially on the OMO yield that you talked about. The last OMO auction came out around the 21% levels, from 24%, and that's significant drop there, almost a 300 basis point drop. Tomorrow auction, we also saw that the last NTB auction results also dropped by about 80 to 100 basis points. We expect to see further drop in the yield tomorrow. We're looking at around maybe 18.5 and then 19 levels. So with all this, we continue to see decline in yield, especially with the huge liquidity we expect to see in the system this week.
And what is the general buying sentiment across all maturities? What does that indicate about investor confidence in the market?
Yeah, so what it means is that, if yield is dropping, and then of course it means that there's a bullish sentiment, and of course it means that the investors are investing heavily, especially as regard the fixed income market and the T-bills, especially the 1 year. So we've seen yield decline over the past 2 months from 22.5 to about 19%, and that's tells you a great deal of investors' confidence in this yield. On the bond side, we also see introduction of a 10-year bond, the 2035 bond. It came out, the result was around 22 levels, and it's currently trading around 21% level. So that shows you the huge confidence we still have in the investors still have in our youth, compared to what is obtainable out there, and especially the the major economy out there. We see how our youth and our market is still very attractive compared to what you have there. So any youth between this level to even as low as 14% is still a great deal for investors, and I think that investors' confidence will continue to grow as the economy improves.
All right, now talking about the economy improving, with the rebase data at this point, everyone believes inflation numbers, will be lower, but is it reflecting the true picture? When you you compare it with, some of the yields that we're seeing, do you think this truly, signifies bullish sentiment for our investors' portfolio?
Ladi, when you look at the inflation figures before now at 34%, and then you compare it to the highest yield we had, it was around 26%. You could see that that isn't it's not good for an average investor, even though yields are too high. So when you have inflation figures that are much higher than your investment figures, then it becomes a problem. And so with this rebasing, don't forget that this is normal economic structure. I think that every economy or every country is actually meant to rebase, every 5 years and 10 years. And so I don't think Nigeria is doing something, different. So with this rebasing, it will actually, bring back a lot of confidence, especially those on the fixed income market. People might, there might be an argument that, look, this isn't where, the true reflection of things. But economic indices don't truly follow what an average man on the street thinks. So there's a reason for rebasing, and then there's also the reason for government to try and tweak and modify some of the economic indices. And I think that as the Fed kicks in, the market itself will react to it. Like I said, you will see that the fixed income market, for example, will react positively. We will see yield drop significantly. And if inflation figure, don't forget, government said that their target for this year in terms of inflation is 15%. So I think this is at 24% now, not officially confirmed, but I think it's been confirmed in one of these platforms. So 15% with this is looking possible. But then what then happens in terms of investment? So if you have inflation figure at 15% and then you're carrying investment portfolio at 18%, obviously it's a delight for every investor. So for me, it's a win-win situation for the economy and then, of course, for investors.
Right. I guess at this point, investors might finally be beating inflation with these rebased numbers we're seeing in 2025. But we're still waiting for the official statement that's from the NBS on what really played out in January. So you talked about the NTB auction that's coming today. What are you seeing, and what's your advice to investors that might be looking at this and not deciding yet on pulling the trigger?
So the auction is actually tomorrow. We have over 700 billion that will be on offer. The last auction was roughly last week, where about 670 billion was on offer, and then the same amount was sold. And then, like I said earlier, we saw a significant drop, a 148 basis point drop from 21.8% to 20.32%. And so we still see further drop, especially with this unconfirmed rebasing result we expect to see. Because one, the market is highly liquid in terms of liquidity that is expected. A lot of these maturities, well over 1.1 trillion, will be maturing on Thursday, will be reinvested into the same fixed income space, as well as the coupon payment about 300 billion will be coming into the market again. So all this will further put liquidity pressure on in the market, and that will definitely reflect in the auction tomorrow. So tomorrow I expect to see oversubscription at the auction, and then I also expect to see further drop in yield, maybe between 70 to 121 basis point drop.
Right. I know that there's some people that might be watching us right now and not truly understanding how to invest, in this market. Now they're hearing about the yields, they're hearing about oversubscription expectations, but break it down, for the layman now that has maybe 50,000 naira or 100,000 naira out there and wants to invest, in this auction. What do they stand to gain?
So, in the fixed income market, let me use treasury bills, for example. We have both primary and secondary market. So this primary market is where, customers through banks, bid directly from the debt management office through CBN, which is, of course, is the primary banker for the government. So for a layman, if you have 50,000 and you want to invest in treasury bills, of course, with as little as even 10,000, you can invest in treasury bills. So all you need to do is just walk into any of your walk to your banker to say, look, I intend to invest in treasury bills. You might not go for the secondary auction, but there are opportunity. I mean, primary auctions, but there are opportunity in the secondary market where you can actually buy up from those who have, who went and won at this primary auction. So you just walk into any of your business office and then they have them, of course, they ask you one or two questions as regard KYC, which is know your customer, just to know your identity and then be sure that, the bank is dealing with the right person. And then they give you probably a form to fill, and then you invest. For now, I mean, investing in T-bills, it's good, lucrative. Right. I think 1 year should be around in the secondary market should be around 18%. So, okay. And T-bills are, should I use the word now, risk-free? No investment is completely risk-free. At least you're sure of 95% risk-free. So right. It's pretty simple, and then it's also a good way to invest and then have your mind at rest rather than chasing this.
Right, and we all need our minds, at rest, in this new year. But thank you so much. It was great having you, Chuka Nwachukwu, Group Head, Balance Sheet Management, UBA. Thank you.
Thank you, Ladi. Thank you very much.
We'll take